Howdy, Wall Street Willie. What is currency? A currency is the official money of a specific country or a group of countries. For example, the currency of the United States is a US dollar, and the currency across 20 European countries, including Italy, France, Spain, and Germany, is the euro. Currencies are represented using three-letter codes, like USD for US dollars, EUR for euro, JPY for Japanese yen, etc. Currency includes physical money like coins and banknotes, digital money like in a bank account, as well as cryptocurrencies like Bitcoin. What is exchange rate? Exchange rate is the relative value of one currency compared to another. It is the rate at which one currency can be exchanged for or converted into another currency, and is usually represented in currency pairs. For example, EUR USD is 1.05, which means 1 euro is worth 1.05 US dollars. So if you are traveling to Europe and need 100 euros, you'll need to pay $105. Most exchange rates are floating, meaning they are constantly fluctuating based on a variety of factors, such as supply and demand, interest rates, political and economic stability, and even unforeseen events like natural disasters. However, some currencies are pegged to a major currency like the US dollar or euro, which means their exchange rate is tied to the value of that other currency. For instance, Saudi Arabia's rial is pegged to the US dollar. Exchange rates also apply to cryptocurrencies. For example, Bitcoin's value is represented in US dollars and fluctuates like any other floating currency. Why are currencies and exchange rate important? The system of currencies and exchange rates is crucial to international trade and finance. They make international trade possible, allow tourists to exchange for the local currency when traveling, affect prices of goods due to currency fluctuations, and impact international investments. How do currency and exchange rate impact me? They impact you the most when it comes to international travel and investing. Let's say you live in the US, which uses the US dollar, and are traveling to the UK, which uses the British pound. Since you can't use dollars in the UK, you'll need to exchange some US dollars into British pounds, and their exchange rate determines how much you'll get when exchanging money. Right now, $1 is equal to around 0.79 pounds, so if you exchanged $100, you'd get 79 pounds. However, if the exchange rate was $1 for 0.6 pounds, you'd get fewer pounds, meaning things in the UK would cost you more, and the cost of your trip would increase. In addition, if you invest internationally, the exchange rate fluctuations can impact your returns. Some people also invest directly in currencies through the Forex market. Watch the video on your screen to learn more. Thank you very much, Wall Street Willie. You're welcome, Super Cooper. Remember, finance is your friend.